Oh, all right. Welcome, everyone, to our latest Alta Insights webinar. We've got a real barn burner for you today. I'm Jeremy Yohe, ALTA's Vice President of Communications, and we're going to discuss some of the most pressing topics impacting the title insurance industry and your business. And we're going to present the content in a way that we've never done before. So all new concept for our webinars. Buckle up and hope you enjoy. Before starting, I've got a few of the housekeeping items to go over. So while the format's different, these housekeeping items haven't changed. The webinar is being recorded. You'll get an email with a link to the recording tomorrow, and you can always access all of our webinar recordings at alta.org/webinars. If at any time you have any questions or comments, you may have some during today's presentation, submit them in the questions box. We'll hold some time at the end for Q&A. I need to thank SoftPro for sponsoring today's webinar. And before getting to introducing the speakers, we have a short message from SoftPro.
With SoftPro, our staff is much happier than they were. Our retention rates are through the roof, and we are delivering the best closing product that we have ever had.
I don't know of any other program that works as well as SoftPro does. The efficiency, user-friendly especially, and then definitely again the customer service.
All right. Well, hopefully on your end that played fine. I started having reverb from that video.
Yeah, looked good.
It looked good. Fantastic.
Yeah.
All right.
Are we supposed to comment on that too? Can we make some jokes about SoftPro? My buddy's there. No, I won't. I'm kidding.
Yeah, let's refrain from that. But SoftPro, thank you for supporting our webinars, and thank you for that message. And now we'll get to introducing today's experts. First, we have Craig Haskins. You all heard him pipe in there. Craig is president and CEO of Knightberry Title Group. Craig focuses on growth and is always looking to improve production and the customer experience. And Craig also is a member of ALTA's Board of Governors. So thank you, Craig, for your role and your leadership for the industry. And also joining us, we have Paul Stein. Paul is the co-founder of Close Simple, which provides services to enhance the closing process. Paul is really dedicated to helping companies embrace change and achieve maximum results. All right, so let's talk a little bit about how this hour is going to play out. I need to give Paul keys to the car real quick, and what you're going to experience is that Paul and Craig have collected 5 short videos from other experts in the industry. We're going to play each video, and then after each one, Craig and Paul are going to offer some thoughts on the videos. So, Paul, Craig, I turn it over to you. Fingers are crossed.
Awesome. Thank you, Jeremy, and thank you, Craig, first and foremost, for joining me today. We're pretty excited about this webinar. This came together over the last few weeks, and the content that we're going to share with you today was shot in the last week. So this is hyper relevant. It's experts from across the country talking about the most critical topics in our industry right now. And one of my worst, Craig, ideas for like what the title of this should be would be like the water cooler topics, which isn't nearly as exciting as the future of everything. But this is the type of stuff that everybody's talking about in the industry, what's going on, what's going to happen over the next 6 to 12 months. And when we talked about doing this, you were a little like, I don't know. And then you came around. So tell me why you're excited for today.
Well, I think I responded with like that emoji that just went like, I don't know if I want to do this. Look, I already made fun of the sponsor, which makes Jeremy nervous. So I guess I shouldn't have done that. So sorry, yeah. But I'm a SoftPro user, so I think I'm allowed to do that. But yeah, the future. You said, Craig, do you want to do a webinar for 500 people with Alta on the future of everything in title and closing? I'm like, well, what do we know? What do you and I know about that? So you said, don't worry, we found these 5 great people to speak on 5 different topics. And then you and I are going to be like mystery science theater. We're going to make comments and have a little fun and put in our perspective on those topics. So I'm excited. I appreciate you involving me on this.
Yep. So I stole this idea from one of my favorite podcasters, and I think it's fun to queue up some good thinking, and then we'll provide ours. We're going to start with Mark Fleming. Mark,
Wait,
everybody probably knows. What's that?
Hang on. Question. Are you going to tell them? You can say no, it's your show. Are you going to tell them what the 5 topics are to tease them to hang around? Or are you just going to, is it going to be a surprise every time? These are things we probably should have worked out ahead of time, but that's not how we roll.
That's a good point. That's a good point. Obviously, when it comes to the most critical topics that we could find to talk about for this webinar, we're going to be talking about the economy. What's the future look like? What's M&A look like in the future? We're going to be diving into the real estate space and what are all the changes that are happening there. We're going to be talking about that. We're going to be talking about tech. We're going to be talking about fraud and what we kind of are anticipating from a future perspective. And you know, a couple of the presenters even say this. These are just some predictions. You know, we're going to do our best to predict the future, and maybe we'll reprise this in 6 months, Craig, and find out if we're crazy or not. But as we get into these, we're gonna walk through them. I won't give you the exact order, but we're gonna start with Mark. Everybody knows Mark, but just to make sure that everybody's up to speed on who Mark is, Mark Fleming serves as the chief economist for First American Financial Corporation, a premier provider of title, settlement, and risk solutions for real estate transactions, and the leader in the digital transformation of its industry. In his role, he leads an economics team responsible for analysis, commentary, and forecasting trends in the real estate and mortgage markets. Craig, are you ready to hear from Mark?
I think every one of these viewers right now is saying, all right, we have an economist talking about the future. There's one answer they're expecting. Let's see if he hits it.
All right, sounds good. Here we go. Mark Fleming, everybody.
Okay, so it's the all-important economic update, and I feel like it's waiting for Godot. If you get the reference, 2 people sitting around talking, waiting for this hopeful Godot to show up. In this case, Godot is the Federal Reserve and Jerome Powell. We've been in a long, cold winter of high mortgage rates for over a year and a half, 2 years now, but we are now on the cusp of rates beginning to decline and monetary easing to be beginning to occur. And even the most recent data is suggesting that we'll likely get a rate cut later this month in the 3rd week of September. Possibly 50 basis points, most likely, almost assuredly 25. The markets are suggesting that interest rates will be cut by the Fed to the total of about 100 basis points by the end of the year. There's only a couple more meetings after September. So it would pretty much mean 50 basis points in September and then 2 more 25 basis points cuts. So maybe 100's too much. But at this point, I'll take the rate relief. We've been suffering from a higher rate environment over the last year and a half. And most importantly, not just influencing affordability, mortgage payments being higher, the amount of home you can buy and the amount of loan you can afford being higher because of mortgage rates. But really the bigger influence being all these existing homeowners who have super low mortgage rates, who have no incentive to participate in the market at all. And the vast majority of the market is existing home sales, AKA existing homeowners selling their home and buying another one. And that's one of the main reasons why we've seen such little sales activity. It really couldn't get much worse than last year and earlier this year. And certainly when you're looking at existing home sales, sub 4 million. Likely to maybe get slightly above 4 million by the end of this year because, you know, the markets and mortgage rates will front run the actual rate cuts. In fact, I suspect the 25 basis point September rate cut that is expected is already in the lower mortgage rates that we see today. What does that mean for 2025? Well, I think we're going to see continued rate cuts. The Fed's long-term projection for interest rates is probably a federal funds rate of somewhere around 3. So at least a couple of 100 basis points in total of rate reduction. That generally puts a mortgage rate in the 5 handle by the time we're all done. I don't think we're going to see the 3s and the low 4s of the pandemic era. That was very unique, but certainly low to mid 5% mortgage rates ultimately in 2026. In the meantime, mortgage rates will probably dip below 6, maybe by the end of this year or at some point during next year. That's good. That does increase affordability modestly for new home buyers. And it will bring some rate lock-in buyers off the sidelines, so to speak. But I think the larger influence will not be the cut in mortgage rates, but people's lives moving on, things happening that cause them to want to sell, changes in life circumstances, moving for jobs. This is why people typically sell their homes. And as time has gone by, those things are sort of mounting and more people have those events. And so we sort of begin to return to more normality of existing home sales in the 4.5 million seasonally adjusted rate by the end of next year. That's still pretty low by our standards. I mean, I think 5 million home sales a year is probably what we should be expecting from a long run steady state, given the size of the population and the housing stock today. And that will probably come not until 2026. So it's going to be a slow recovery, but a recovery nonetheless in 2025 as rates modestly come down. House prices will also likely continue to moderate, more supply, a little bit more affordability, more rate locked in buyers bringing their homes to market should sort of take the squeeze off house prices a little bit here. But remember, we have not been building enough homes in the United States for over a decade at least. And that doesn't go away in 2 years, and that's not changed by lower mortgage rates. And so there's always going to be some inflationary upward pressure on prices until we can honestly solve the problem of building millions and millions more homes in the US. But just to close out, I think, honestly, it's been tough. It's been probably 2 of the toughest years I remember, other than the global financial crisis in my career in housing real estate. These last 2 years, it's also been really the only time we've experienced significant rate increases. But that has passed. Monetary easing is coming. Lower mortgage rates are coming. And that will help us get back on a more solid footing in 2025 and continue to grow into 2026. Thank you.
Should we all, is it like everybody stands and applauds, Craig? Is that like the point we're at here?
Well, yeah. I mean, as predicted, the people watching this probably wanted to hear the key answer of when will rates come down a little bit? You heard it right there. I think you can't turn on the financial news right now without hearing about rate cuts coming. And the Fed Reserve, I believe, meets next week. As I look at CNBC on my TV here, that's Fed rate cuts right on the screen. So it's obviously the hot news. I'm glad he touched it right off the bat. Here's something interesting, I think. You know, I talked to my friends. I said, hey, you know, you've been in your house for a handful of years now. What are you thinking? I said, well, I got a 2.5 or a 3% mortgage. Where am I going to go? I'm not touching this one. What, forever? Are you just going to die in that house? You're going to ride it out for 30? Who keeps a 30-year mortgage for 30 years? Like, and Mark touched on it. People's lives change. It's not just the rates that will influence. I mean, they're going to have to move sometime. If they're waiting for a 3, Mark said it's not coming. He said at the end of 2026, you're going to have in the 5s. So it's going to be a slow, long recovery, but that's not 3. My own personal mortgage is in the 2s. I'm an ARM guy. So I'm in the 2s. Am I there forever? No. They're going to, I mean, home sales will pick up. You'll get into a new normal, and he's thinking what, 5-ish in the mid 5s? We'll see. I do like the fact that refinance activity is key to a title company. It's fun to have. Typically easier transactions. Typically the volume picks up very, very quickly, but on the flip side, it goes away very, very quickly. So hopefully we've already seen in our own company a bump in refis. I think we're double. August refi count was double February, which was interesting. And it hasn't even, the Fed Reserve hasn't even touched the rate. So we're gearing up for a fun refi fall and winter. And hopefully, as you know, I'm sitting in Milwaukee, Wisconsin, where it's a cold, harsh winter. So we're excited for March and April when the next home selling season comes around, and hopefully some of these people get off the fence. What are you thinking? What about your own life?
I think I relate to that. You know, I think the pandemic probably froze some people into, you know, maybe it is a rate thing. You know, I have literally, I was with some extended family 2 weekends ago, and they moved to Atlanta for jobs, and then they got into their home at a whatever % rate, and that's actually has more impact on them staying in Atlanta than the jobs. They're like, well, we could go get jobs in other parts of the country, but we have this rate. So I think you're right. Today, that's probably, so let me just, here's what I'm thinking, because I'm going like, that's crazy. You're gonna like literally plan your whole life around your rates. I think everyone still has this in the back of their head, and that's, to Mark's point, going to start to change. But I think there's a lot of people who have been kind of frozen in place going, what's gonna happen? Can I even consider moving based on the rate I have? And as things start to come down, I think that is gonna change the, you know, how people are thinking about it. Does that make sense?
It's like, I call it like owner fatigue. It's like, I've got friends that are like, well, we'll see what the rates are next year and then we'll think of selling. I'm like, you've got 2 new kids. You've got a 1-car garage. Your kids are going to go to school soon. What are you just going to ride out your 2.5 for 30 years? Like, get over it. You know, you're going to make more money every year in your life, and the mortgage rate will be easier. And anyway, one last question.
If 5 million's the, you know, what Mark talked about is like the steady rate. We're at maybe getting to 4 this year. Do you think that's a year or 2 before we hit that 5? I mean, are we talking about a 25% increase in 25, or are we talking about 25% increase over 2 years?
Yeah, I think he was saying by the end of 2026.
Okay.
Rates are hovering steadily in the 5s, and you get up to 5 million home sales in the country. So I think that's what his goal was, like long. That's why he said it's a long recovery, but a recovery nonetheless. So, all right, I think go ahead.
Yeah, sorry. No, I think that checks out with how just the sentiment of the different folks in title I talk to on a regular basis across the country going, it's going to be this over the next few years.
And the home building thing is totally an issue, but you can't find a crane anywhere in the places I go to that aren't building nice apartment buildings. And getting those younger folks into owning something versus renting is still a challenge, hence the last 10 years of very low activity in home builders. So, all right, how do we do on that? Good.
I think pretty good. Everyone's applauding. Yeah, nice. I'm trying to make myself present again because we got to get to our next presenter.
Okay.
Well, let's see. Hey, Jeremy, if you're listening, we need the producer to make me the presenter again. While I'm doing that, let's talk about where we're going next. So we like where the economy's going. Now let's talk about M&A. That's where we're going next, Craig. And we're going to talk about, and I think as we get into this one, we'll watch and it'll be fun to kind of build on what Mark's saying now as we start to think about M&A. So for M&A, what's that?
You should have the keys, Paul. It says you're the presenter. Did you maybe minimize it?
I did not. Oh, here we go. I'm ready to go now.
Cool.
All right. Sorry, this is the first time we've done this, Craig. All right, we got Marcus Hunt talking about M&A today. So Marcus is a co-founder and partner at Title Success Solutions, where he provides expert guidance on mergers, acquisitions, and succession planning for title businesses. He is also the founder and co-owner of South Oak Title, a rapidly expanding real estate settlement and title company with operations across several southeastern states. With a background in real estate and franchise law, Marcus brings a wealth of experience in entrepreneurship, business consulting, and industry growth strategies. He's great to have on right now, Craig, to talk about M&A. Before I roll this, any final words?
This is a good dude. This is an up and comer in the industry. Everyone should have Marcus on their radar. Very nice guy. Obviously, lots of chatter about exit strategies for title agents. A lot of title agents want to buy other title agencies or grow. So what might have been dead for the last few years seems to be on the horizon. So I'm sure Marcus will tackle that. Good guy, grew up in Texas. Bad guy, went to Auburn.
And here we go.
Hey guys, thanks for letting me be a part of today's discussion. Always excited to talk about the M&A space and what we're seeing. Just kind of broad view. The M&A world is kind of like, I compare it to the real estate space and even buying houses. And so, rates have gone up and it's put a little bit of a credit squeeze on, people looking to maybe buy companies using financing options. And also, prices have kind of come down in the space as well. And so that's kind of kept people on the sideline. But I think we've gotten to a point now where everybody's gotten comfortable with kind of where we're at. It's kind of the new norm. And so we're starting to see some more movement. I feel like buyers are starting to come off the sidelines now and starting to look. And so just kind of from a broad perspective, what I'm seeing with sellers, they've understood that the profits in the great market we had when everything was just running wild, those days are kind of gone, and it's hard to really include those in today's valuations. And so I think most of our sellers have gotten comfortable with that. Really now looking for the past 2 to 3 years worth of financials to get kind of our valuations done and kind of a look back to those years. So I think our sellers have, one, gotten comfortable with that. Two, I think the other big piece is, and this is kind of for both sides, but sellers have gotten comfortable with, okay, I may need to participate on the back end of these deals and ride the market. We all know the real estate market is cyclical, and so is our business. And so same thing when it comes to participating kind of in an earnout. So if there's a lot of upside growth, I think the best way to structure these deals moving forward is for a lot of participation on the back end, which is kind of a win for both sides. Buyers are more willing to, that eliminates some of the risk on their side, but also it gives the sellers a bigger incentive to ride that wave of some growth. And so I think from both sides, that's a good thing. And then kind of in the buyer space, what we've looked at and what we've seen, the smart buyers, I think, are starting to come back to the market. Again, just in anticipation of a lot of the upswing that I feel like we're going to be on over the next 2 to 3 years. And so kind of getting their house in order, trying to find those markets that they want to participate in and maybe grow into. And so finding those partners now to acquire is a great strategy to be able to start building kind of for the next kind of real estate run. And so that's one thing. The other thing we're seeing with buyers, other thing that I just kind of recommend our buyers, don't lowball the sellers, right now. We've kind of gone through, everything's been depressed. I think there's a balance of like upfront, capital as far as part of the acquisition pricing. And then again, like we talked about, something more on the back end earnout. And so that's kind of how we're advising, structuring deals. And then, just to kind of put a bow on it, again, I think it's just a really good time now to start. Again, I've got sellers that are interested. We've gotten more sellers kind of knocking on the door and kind of raising their hand saying, okay, I think I'm ready to make a move and do something. And again, smart buyers are out here looking for opportunities. And so one other thing that just kind of a insider plug from our side that I'm super excited about is we're actually launching a kind of a listing service brokering site just geared towards the title industry. So whether you work with our team or not, it's a great place to go find new information of opportunities. And if you're a seller, to maybe, post your listing and post that, you're looking to sell. And so those are some of the exciting things we're seeing in the M&A space, and always glad to talk to you guys and hang out. Thanks a lot.
Right on. Right on. I agree with everything you said, except, well, I don't want to say except. So I've bought 35 title agencies in my life. I've never sold anything, so I don't really know the seller perspective hat, but I deal with a lot of people that are selling. It's been very quiet for the last couple of years. Sellers, one thing he said, are sellers are getting comfortable with a more realistic valuation, meaning during COVID, you open the door and money flies in, orders fly in. Everybody was crazy busy. So sellers had said, look at all this business we do. Our business is worth a lot of money. And then the buyers are saying, well, we have a lot of money too because we're doing business, so let's do a deal. And it was crazy. There was a couple years of just insanity. And then it got very quiet. And sellers are like, wait, but remember all the deals we did in the COVID years? Those are long gone. So coming up with a reasonable way to value a title agency on historical performances has become very difficult because of the COVID years. So everyone kind of looks forward. Marcus was saying sharing in that, and an earnout. The one thing I said I'm not an earnout guy, but I've had many of bourbons with Marcus, and I think I'm gonna become an earnout guy. So that's like, make a round number so we don't have to do math. Seller says, give me $1 million for my title company. And the buyer says, I'll give you $500,000. But over the next few years, if we have a great year, I'll share with you and we'll get you up to that $1 million. But if it's crummy, I think it's still worth $500,000. So you kind of share in the upswing. Now you might share in the downswing too, and that's why I always encourage sellers, you've got to stay on. You've got to have good leaders in your company. If I'm buying your agency, or if someone's buying your agency and you're saying I'm retiring on day one or even 6 months in, that's not enough time for me to know where you've buried all the bodies and how everything works in your market, who all your key players and customers are, what your products are, how you price things. So having a seller willing to stay on for a while also helps because they're sort of choosing their own destiny as to how well they'll participate and keep that thing. The one thing a buyer wants is consistency. I don't want to go in and see the company tank. I want to go in and help improve it. I don't want to mess it up. And the sellers participating in that is what Marcus is talking about. And buyers are like, okay, it's been a rotten couple years, like Marcus said, and then Mark Fleming said, but now we see an upswing, so maybe we'll come off the sidelines and spend some of the cash we have on reserves because maybe it's going to get hot soon. So anyways, I think I loved it. I think that's my recap of Marcus's. What'd you think, Paul?
Yeah, I think so too. I mean, I think it's interesting to watch businesses just get acquired in general and try to maintain culture and try to improve and centralize and all that kind of stuff. And probably for all involved, sellers who care about legacy and care about their people and care about, you know, what happens to the business post-acquisition, there's a win for them there and for their people. And then obviously on the buyer side to take a little bit of the risk off the table and have more continuity like you're talking about. So that's not the like dollars and cents piece of it, but you know, I think, you know, anybody who's building a business and wants to last and have legacy can get behind the idea of making sure that as it exchanges hands that it goes well. So I like that side of it too from this projection or from this prediction. And based on what Mark said, it feels like there's good upside on both sides of the table for this. And win-win is always best, right? So, you know, It might take a little bit longer, but if it truly can be win-win, and maybe it's 1.5, you know, depending on how the market goes.
Yeah, I like your point on culture and the legacy of the seller. I love it when a seller says, hey, if you're going to buy this company, I don't want you to screw it up. Let me tell you about the culture. This is what's going to work. These are my key people. I want everyone hired, and I want to stay on and see this thing. Maybe we change a name. Maybe we put in your software and your talent, stuff like that. But I want to see this thing work because I built this up. I love that. There are some sellers though that say, Craig, you're going to hand me a check at the closing and you're never going to see me again. And I'm like, I don't know. That kind of feels slimy. But I've done a couple of those. Now they don't typically work well, and I wish I could undo a few of them. But for the most part, those sellers that want to hang out and help us as the new buyer be great, love it. But you've got to be prepared. You can't start now and sell your company in January. It's just, maybe you can, but it's best to have everything well thought out, have all your key staff ready to go. Very interesting.
If Marcus is right and buyers are, you know, coming off the sideline and so are sellers, this feels like, all right, we're going to come out of this sort of like slower time from an M&A perspective. All right. I like it, Craig. How are we doing? Like, doing pretty well over there? Like, keep rolling?
Yeah, so far, by the way, someone asked in the chat if we can get Marcus's contact information. We'll figure out a way to disseminate all that and all the speakers' contact information for follow-ups. Marcus mentioned a little plug for his own company on, hey, I want to sell a title company or I want to buy a title company. Can you broker this for me? So he wants to do that. So we'll have to figure out a way to get people in touch with Marcus too. So
yeah, I like it. Well, now's a good time for me to remind everyone that Craig and I are going to be making available just kind of a cheat sheet of everything we're talking about here. It's going to come out in the next couple of days. If you want to sign up for that, you can go to closesimple.com/future of everything or /Craig and Paul or /Paul and Craig. So if you can remember any of those URLs, go there. We'll make sure that we have contact information for Marcus.
What, did you just give me homework? Was I supposed to write it down?
No, everyone else can though. closesimple.com/future of everything and get that download coming out of this webinar. Okay, so from, you know, the economy looking good to M&A starting to get exciting, we're going to now shift, Craig, into real estate and what's happening there. So let's go from like what we're seeing and what we can kind of get excited about to something we have no idea what's going to look like in the future. But we've got a really great contributor here. And don't forget, we still have fraud coming up in the future of fraud. We still have, you know, some thoughts on tech coming up in title. So those are coming. But let's shift now into real estate. We've got,
and spoiler alert, we're not doing wire fraud. We're not doing vacant land fraud. So I know we've beaten those to death, and I know we should for infinity years beat those to death, but this is a little different twist of fraud. So there's a little bit of teaser.
That's right. So we've got a broker owner out of Minneapolis who's going to join us to talk about the real estate space and some projections there. Jeff Bray is co-owner and the managing broker of Engel & Volkers, Minneapolis Downtown, a premier real estate firm that he co-founded in 2015 with a focus on delivering a world-class client experience. Jeff leads a team of elite advisors who serve the Minneapolis-St. Paul metro area. Under his leadership, the firm has earned a reputation for utilizing cutting-edge technology, including virtual reality, home tours, and for offering personalized luxury real estate services. Jeff's approach emphasizes client advising over selling, ensuring satisfaction with the overall experience rather than just the transaction. Folks, I don't know how regularly we have realtors on our Alta webinars, but we're going to hear from one right here. Did you want to add anything else before I start?
No, I don't touch realtors. You're on your own, pal.
All right, here we go. Let's check it out.
Hey everybody, Jeff Bray, Engel & Volkers, Minneapolis broker and owner, coming to you today from Minneapolis. It's a beautiful September day, and we are just weeks past the August 17th rule change that has been passed down by the National Association of Realtors. And I just want to give you a brief update of what I've seen so far and maybe a couple of predictions, and I want to be very careful to say they are only predictions. We cannot say what is going to be certain at this point or not, but we've already seen a few things kind of unfolding. So of all the changes that the National Association of Realtors have put into place as of August 17th, 2024, on a national scale for all residential realtors in the United States, is the big change of commissions being taken off of the multiple listing service. Why is this such a huge change? Because prior to August 17th, a buyer would hire a real estate agent. They would know in advance of going to look at a property if the seller or the listing agent was offering to pay a buyer broker cooperating commission. And today, if you go hire a real estate agent as a buyer and you go look at a house, you have no clue if that seller or the listing brokerage is paying your agent on your behalf to create a successful closing. The MLS has taken those off, and what's really interesting about that is that prior to August 17th, the commission being paid out by the listing brokerage to the buyer brokerage was the only contractual item on the MLS. Think of the purchase price. The listing price that you see on the MLS of $700,000 is not what the purchase price may end up to be. It was not contractual on the MLS. The commissions were non-negotiable. If there was a commission offering of 4% to a buyer broker and the closing happened, the buyer broker was getting 4% at the closing table, okay? So the fact that this has now been taken off of the MLS is really interesting. Now, a couple of predictions that may come from this is that the commission structures and the percentages in which sellers or buyers pay a professional real estate agent may change. I think that there has been some discussion that a listing agent may be able to charge a little bit more because what they used to charge was quite high because they were offering to give some of that to the buyer broker. That's no longer happening. On the buy side, the commission is now in the purchase agreement, and it's a negotiable item when the buyer and the seller are negotiating for the purchase of this property. That was never a thing before. It was always discussed between the brokerages in the multiple listing service listing. Okay, so we've got the listing agent, first contact with the seller, charging what they charge to sell a house. You've got a buyer broker going under contract with a buyer, seeing a property, not knowing if there's a commission payout, but asking for one in the purchase agreement. and now it's a negotiable item. So what happens with all that? It's really unknown at this time. We're only less than a month in, and we'll see how this unfolds over the next couple of months. The other thing that I want to talk about real briefly is the associations themselves. I think that we're in a situation in time where the associations themselves, not only from the national association, but the state and local associations, are in a time of real jeopardy. We're seeing already a decoupling from the associations from the multiple listing services because of all the liability that they feel that has been created by these lawsuits. And if there is a decoupling from the associations and the multiple listing service, that potentially means, and this is already happening, that non-realtors, meaning you are not a member of the National Association, you are not a member of your state and local, would potentially have access to the MLS. And so my question, and we'll see what happens, is this. If the multiple listing service no longer has a contractual offering for a buyer broker commission on the listing, what makes them a whole lot different than a Zillow or a local brokerage website, which still has all the home information, but not offering a commission payout? It'd be quite interesting to see how that unfolds. I hope you found this update helpful, and I hope you enjoy the rest of the seminar.
What, Craig Haskins doesn't have like the first word? I don't know what to do. I really don't know what to do right now.
All right, look, we have 400 and some employees. I've instructed every single one of them. We don't make any comments or opinions on which of these processes of commission, who's paid, what's the right, what's the dumbest plan, what's the better, none of that. The trick for us right now is making sure every one of the people at the table agree on who's getting what. So there's some of our states, they have different forms than others. Some real estate agencies have different than other brokerages. So for me, my instructions to my staff is just make sure there's an agreement among everyone. This guy gets this much, this one gets this much, and here's who's paying. Go put it on the closing statement and let's move on with it. I don't have any opinion on what the case is, whether it's going to be appealed, what's the better rule, what's the better form. I have no idea. I want to stay out of this one because the realtor work is my bread and butter, as is most of the people on this call. And I just figure that this thing, like everything, will shake out over a few months. Just like TRID, when we thought the world was going to end, we figured it out. And it's so 2015 or whatever it was. So
Yes.
anyways, that's all. I don't really have anything good to add on that.
Yeah, so by the way, go ahead, because I've got a couple.
I do have one question for you. He's from Minneapolis. You're in Minneapolis too, right? Is there like a rule with like really good hair and a skinny beard for all you guys from Minneapolis, or is that not a? All right, go ahead, Paul.
No, there is not. So Jeff's good. You know, like he spent some time at the Minnesota Land Title Association a few years ago, and it was like an eye-opening thing where he was like, wow, it's really interesting to hear what you all think of us. So what's been cool is we've had him, you know, a part of more conversations as he's, you know, learning more about what are the, you know, issues in title and that sort of thing. And so I think his perspective is good. The other thing is, just so everybody's, you know, clear on what's changed, Craig's right. Like understanding who should be getting paid what is probably still the broker's like ultimate thing, but you're right, the checks. So making really sure that the commissions, whether it's in the buyer contract, it's in the seller contract, in the purchase agreement, all makes sense. It's like anything, Craig. It's probably going to land on title's, you know, shoulders to make sure that it's right, and make sure that you're not calling a realtor 3 days later going, I paid you too much. Nobody wants to do that. So making sure that you have the commissions right is going to be super critical. And then you're right, how this actually shakes out will be interesting. Here's my thing, Craig. When this ruling came through, Zillow stock went down. And I was like, I don't get that. I get that realtors today currently pay Zillow's bills. You know, like they're their biggest customer because they're the ones paying. But I think what Jeff said is interesting, and this is what was going through my head when this announcement came out. Zillow versus the MLS, they're really the only ones who have really figured out how do we get these listings. You know, obviously there's some local websites and that kind of thing. I think it's going to be really interesting to see where Zillow fits into this whole space 6 months from now. So I don't know if you want to comment on that piece.
I don't want to comment on that. I trust you. I want to add one last thing. We're seeing a lot of buyers who have to pick up some of the commission now saying, I don't want you to show the seller how much I paid for my share of it. So that's been like a hot topic in our company of our closers emailing our compliance people saying, hey, the buyer doesn't want us to really, we would show it on the closing statement, but the buyer doesn't want to show the seller what they paid. It's none of the seller's business. It doesn't need to be on the seller side of the closing statement anyway. So there's this whole request right now, which is interesting to figure out how that'll all shake out. But you're right. The agencies, the brokerages should reach out to the closing agent and say, this is what I'm expecting to be paid, and this is what side of the closing statement is going on, and we'll figure this out.
Yeah, guys,
All
that's exactly what Kimberly put in the chat. It's definitely important for the title company, escrow company, to get that commission information.
For sure.
I kind of forgot Jeremy was there, frankly, Craig.
I was like, it's like the sound of God somewhere, and it's only Jeremy.
I'm just the VOG. That's right.
All right.
All right. We're moving on.
So we're down to
Craig,
fraud and tech, right?
Fraud and tech, and Craig teased it. We're not, we're going to kind of take a little different angle on the fraud. But before we get to fraud, we're going to get to tech. And as a reminder, if you want a recap of the main points of this conversation, go to closesimple.com/future of everything, and we'll put it all in there so you can, know your stuff at the water cooler over the next couple weeks. So we're moving on to tech. I mean, I don't know if this one needs any introduction, Craig. I think we should just roll it.
Just hit play.
All right, here we go.
Hey everyone, it's Brett Beckett, and today Paul asked me to talk about something that's close to my heart, the future of tech in title. And although we're not to drone delivery for earnest money yet, I'm still keeping my fingers crossed. But in all seriousness, this is a huge topic, and I wanted to focus in on one single point today, and that is that customer friction in a transaction is higher today than I feel like it's been in a really long time. If we go back to 5 years ago, compared to today, one of the biggest things that's increased is the number of vendors that each one of us title agents uses. In a transaction before, most of the communication happened between the title company and the customers themselves. Today, we have vendors for everything, and most of them are to make things better or to combat fraud, but there are so many and they each do slightly different things. So what this means is in any potential transaction, and I'm not trying to call out anyone specifically, these are all vendors that we use one or many of, but a seller may have to go through a KBA authentication to identify who they are before they can fill out their seller information sheet. That information sheet comes back and then they get a certified so that they can provide wiring instructions, or maybe they get a certified to verify their identity since it's early in the transaction and they have to go through all of the identification verification processes. And then later in the transaction before closing, they'll get the same thing. Then they might get an email from DocuSign asking them to sign some documents, and they might get an email from on the buyer's end, an email from Zochem or BankShot or any of these earnest money deposit vendors that come from them. And meanwhile, in order to combat fraud, us as a title company is saying, by the way, you should only trust communication that comes from us, or maybe us and these lists of vendors that we use. Well, we've kind of expanded our vendors to so many different email communications that may be coming in that even I lose track sometimes. So one of the biggest friction point for customers in our in a transaction right now may be validating whether or not an email that they're receiving is legitimately on behalf of the title company or not. So when I'm looking into the future and what I think will happen 5 years from now is, and I know we've got Paul from Close Simple on the phone or on the call. I will say that one of the things that they're doing really well is branding. I think in the future, the back end may be supported by all of these different vendors, But at some point, in order for us to help fight fraud and be more consistent in controlling the experience that we have with our customers, all of the communication is going to need to originate from the title company's domain, from a real person at the title company. And that's ultimately going to help reduce overall friction for, the multiple scale of generations that we're trying to serve with this technology right now. And so I would say that, when I'm looking a few years ahead, I think that that's a friction point that I see today. And really, it just grew from us having to respond to so many different types of fraud so quickly. Generative AI has given the bad actors an upper hand in some of these cases. And so we've been able to combat these different fraud schemes at every step of the way, but we've had to do it with a very fractured, different number of solutions. And so I think going into the future, that's going to be one of the focuses of the industry on the title agent side, is to consolidate communications that we have with our customers directly. The title industry is in a critical turning point, and I do think in the next 5 years, reducing customer friction, improving fraud prevention, through consolidated communication is going to help drive the future of the real estate transaction. I'm excited to see how companies lead the way. Thanks.
Of course, during the tech presentation, my camera turned off. So let me get this straight. So Brett is wearing a VR headset while flying a drone, sitting in his Tesla Cybertruck from Austin, Texas. What a nerd. You picked the right guy for that one.
Yeah, I was so excited to show this one that I didn't even introduce Brett. So for those of you that don't know Brett, he's the Vice President of Finance and Strategy at Independence Title, knows a few things about this. Based on, obviously years in the title industry, he's actually an aerospace engineer, and I know he advises a lot of tech companies from Austin. The thing that I was surprised by, Craig, is it took him like 4 minutes to say AI. So I don't know what to do with this. This is the future of tech in title, and we just got to AI 3 minutes in. What do you think when you think about this? Obviously, I think this is an interesting point of view and something different to say than what a lot of folks have said about where's tech going.
First of all, I was glad a cop didn't tap on his window and or put handcuffs on him. That's a bad Miami Dolphins Tyreek joke. So look, I watched that, and I'm a sucker for tech, just like Brett. So we have so much tech outsourced vendor stuff at our company, and I never realized it's like, as a normal buyer and seller, all of these companies, the earnest money, the this, the that, the wire, the DocuSign, the SoftPro sign, all these people are hitting up these buyers and sellers, and it's not coming from Knight Berry all the time, or our company. So I was thinking about that. Yeah, he's right. I don't know if I have a solution for that, but it's something to definitely think about from the buyer and seller perspective, sitting there just getting hammered every couple of days by a different email having to do with the transaction from a different one of our vendors. Is it too much? I don't know. He might be right. Consolidating communications through the title agency only seems logical. I don't know how to do that right now, but it's something that I'll challenge our tech team to think that one through. So I thought that was good stuff.
Yeah, it's been interesting for me because, everybody I think knows Close Simple, pizza tracker, email, text. When we first got into this, it's probably about 8 years ago now, people were still going, wait, so you send these emails direct to the consumer? Like, you talk directly to the consumer, huh? And at the time, there were some, more progressive agencies doing that. And now here we are 8 years later, and we've got folks like Brett and yourself saying, yeah, we're literally potentially over communicating to them and or creating confusion where, 2 weeks before closing, they get an email that says something changed. And they're like, okay, like I've gotten so many different things. So it's been interesting to watch the evolution of that, and now to start going, okay, what does the future look like with regards to how that comes together? So that's just my perspective, and having a lot of conversations with folks about how to communicate over the years. And it's been interesting to see that evolution get to this point now to hear this. So where does it go then? You want the final word on this?
Yeah, I don't know. It's good homework for me. I've got to really think that through. But I don't think our staff wants to or can do as good of a job on some of the communications that some of our vendors, like the certified stuff with wire fraud, some of the stuff you guys do, the earnest money. I don't know. So I don't really know if I want to unwind that and place it back on the labor on our staff. If the vendors can do it as well, maybe we just have to let the buyer and seller know the expectation's a little different. You're going to hear from this different set of vendors for this specific task, so they're not surprised when they get an email or a phone call from any of those vendors. But
yeah, I know there's a bunch of us trying to figure it out too. So I think it's a good challenge that Brett laid out for the industry as a whole.
Yeah, interesting. Very interesting. Thanks, Brett.
Real quick, voice of God, just to add some more, color here. Colleen says, I agree, less and more direct is better. She's a small company, and her clients say they are overwhelmed by the emails and prefer the personal contact and direct emails from the title company.
True.
I like it. It's a good challenge.
I've got to pay for all the labor for all those personal contacts, and our staff would love to do, reach out to all the buyers and sellers personally but that's a lot of work, and it takes away from when they're handling closings or prepping. So it's a delicate balance. This is definitely something for food for thought as we head into the winter.
Yep.
So
I like it. All right. Last but not least, Craig, we're going to fraud. You ready?
Bring it.
All right, we're going to hear from Nishad Khan on this one. He's a highly accomplished real estate attorney and the founder of Tycon Title, a forward-thinking real estate title company based in Central Florida. A Florida Bar Board certified specialist in real estate law, Nishad has built a distinguished career representing thousands of clients in both residential and commercial real estate transactions. His extensive expertise spans areas such as contract preparation, entity formation, title insurance, and due diligence. He's a certified instructor for the Florida Realtors Association, and he frequently shares his expertise as a speaker at various industry events and conferences. And now coming to us on this Future of Everything webinar, let's check it out. You ready?
Hey guys, I'm Nishad Khan, and today I want to talk to you about a pressing issue in real estate, elder fraud in the real estate transaction. As we already know, fraud is a serious problem in real estate, but elder fraud has been on the rise, and I believe it'll continue to increase over the coming years. Let's understand what elder fraud in real estate looks like. This type of fraud usually occurs when a family member, friend, caregiver, or even a complete stranger takes advantage of an older person's financial assets, usually their home. This may be done over many years using deceit and manipulation to build trust and confidence in the bad actor. As the elderly person lowers their guard, the bad actor uses improper power of attorneys or false deeds to transfer ownership to themselves, usually under the guise of preparing estate planning documents. So why do I believe this is going to grow in the coming years? Well, there's several reasons. First, the aging population. According to the US Census Bureau, the number of Americans aged 65 and older is projected to nearly double over the next few decades. Americans are having fewer children, and people are just living longer. Fewer babies, coupled with longer life expectancy, equals a country that ages faster. Older adults are expected to outnumber kids in 2035 for the first time in history. By 2040, more than 80 million Americans will be over 65. This demographic shift means that a larger portion of the population will be older and potentially more vulnerable to fraud. The second reason I believe this type of fraud is going to continue is that the property values have been steadily rising, especially in urban and suburban areas. For many seniors, their home is their most valuable asset. As the value of these homes continue to grow, so does the incentive for fraudsters to target elderly homeowners who may not fully understand the current value of their property. Property taxes, assessments, and insurance have all increased, and seniors with fixed income may be looking for alternative solutions or an easy way to cash out. Unscrupulous investors may bait an elderly person to sell their home for significantly less than its value. The third reason I believe this type of fraud will increase is the fact that we're now handling closings in this digital age. While technology has brought many benefits, it's also created new opportunities for fraud. Online transactions, digital signatures, remote notaries are becoming more and more common in real estate, And unfortunately, many seniors just aren't as familiar with these technologies and can be easily misled or deceived into signing documents they just don't fully understand. Many documents these days are signed with the touch of a finger, and an elderly citizen may not understand the effect that that document has in a real estate transaction, such as a contract. Fourth, the isolation of many older adults. COVID-19 pandemic showed us just how isolated some older adults can become, and this isolation often makes them more susceptible to fraud. Scammers exploit loneliness and trust, building relationships that ultimately lead to financial exploitation, including fraudulent real estate deals. Based upon these reasons, I believe elder fraud in real estate transactions will continue, and fraudsters will come up with new ways to take advantage of our elderly population.
Yep. Yeah, it's definitely an issue. So I put together sort of a little list of things that title folks, closers, title people, exam, search, staff, management should kind of be on the lookout when there's a potential elder abuse having to do with a real estate transaction. One of the most obvious one, first of all, the most obvious one is just our common sense. We can kind of sniff out a fraud. We're very good at that. When something just doesn't feel right, it's probably not right. It might be fine, but you should ask questions. Very recently handled power of attorneys. So if they're getting duped and the fraudster wants to take over the powers of the elderly, or whatever the term we're using, old person, I think he was using, so we'll use that. A very recent POA is a telltale sign. Doesn't mean it's wrong. It just means that you probably should ask a couple other questions. But common sense is a big one. We also see dealing with one sibling who's running the show and none of the other siblings seem to be involved in the process. That's maybe a red flag. Now, I've got 4 brothers and sisters, and I'm the oldest. So I would suspect that I'm going to run the show, but whoever's dealing with me in that transaction probably ought to ask my siblings, is Craig really on the up and up here? So asking questions if you feel weird. Transactions without real estate agents. Believe it or not, real estate agents are very good at identifying things that don't feel right as well. Don't roll your eyes, it's true. So if they don't have a real estate agent, maybe that's another sign. You put all these things together and it kind of starts to look weird. Ask questions, get to the point where you feel good and it feels legit. And of course, as he mentioned, any recent deeds or conveyances or documents in the chain of title recently done to put someone else in charge of the property other than the older person who may have owned it for a long time. So very good stuff there on elder fraud. We don't talk about that a lot. I haven't seen an elder fraud seminar in quite a while. I'm not saying they're not out there, but we're so used to talking about wire fraud, vacant land, seller impersonation, all the hot topics that sometimes we forget about something as simple to spot as these. So what do you think, Paul?
Yeah, I think it's interesting. I mean, you mentioned some of those other types of fraud, and it feels like we're always going to be the fraudsters are chasing new opportunities and we're trying to chase down the fraudsters. So I think there is some parallel in what we're seeing in the vacant land piece. You know, and when we talk to folks across the country, it was vacant land, now it's non-owner occupied, now it's old person occupied potentially, where, you know, as that population grows, we know that they're vulnerable, right? So Alta just published a bunch of interesting information along with AARP, you know, like the full financial exploitation 2023, 1.9 billion. And we're seeing an increase, I think 14% unreported elder abuse from 22 to 23 of like 14%. So not huge compared to some of these other areas yet, but I do think it's coming. And I think you're right. I think the intuition piece, and I do think that there's some opportunity to layer in technology to start saying, how old is this person, and find out early in the process, especially if we're not in a community where we know everybody who's potentially selling their homes, right? But, you know, here's my question, Craig, because like the statistics that Alta sent out said 60 and over. Nishad said 65. What is old, do we think, at this point?
Well, it's definitely not 51. Let's just make sure we all agree to that. So I don't know, but I could tell you, again, I think it's just intuition. Everyone involved in this call, everyone in our industry, we know when something feels weird. And I think that's whether you're 75, 85. My last couple text messages from my 81-year-old father-in-law was, Craig, does this seem legit to you? And it was the Bank of America text saying he needs to call about his account. And I said, but you don't bank at the Bank of America. And he said, so I shouldn't call them? I'm like, no, you shouldn't call them. The second one is, Craig, there's a text telling me my Amazon package is delayed. And I said, did you order something from Amazon? He said, no. I'm like, well, don't click on the links. So they're like he mentioned, they're not amazing at tech, and easily duped into clicking and moving things when they probably shouldn't have.
The thing is, they have it. My 100-year-old grandma Gmails the family every week. So I can only imagine what her life looks like from a fraud perspective on a regular basis. So they have the tech. It's concerning that they have the tech because of this. So it's just, again, what's coming, likely this. Let's just continue to do the steps that Craig mentioned. And anything, you know, we talk about this all the time on our team. Yes, it's great to have tech in place, but human intuition and understanding what's going on. Interesting, I know where this neighborhood is. Why is this purchase price $200,000 less than everything else I've closed in the last however long? You know, so like just stuff like that, we can continue to be on the lookout for that.
Yep.
All right.
There's a million stories on this, but we're a few minutes over the hour, so let's figure out what to do. Hey, the voice of God is back. Jeremy's on the screen.
I'm still here. I'm not all playing video games. Apologize for the buzzing. It seems like my neighbors, landscapers here, so they leaf blowers.
We can't hear it.
Full force. All right, good. Wow. All right. Correct, Paul. Never been done before on this, so I don't think we had any fumbles. I think it was a touchdown, unless it's the Florida Gators. They don't seem to score too much these days.
That's the low blow. That's a low blow.
Easy. On the fraud, also has various resources, whether it's seller impersonation, wire fraud, elder abuse. I guess Kimberly says 85 and older is old, Craig. So I think we're safe with it.
Thank you, Kimberly.
We got some time, Craig.
Anyway, there's resources at alta.org. Check them out. Quick reminder, if you missed parts of today's webinar, think others in your office would benefit from listening. A recording of the presentation will be emailed tomorrow. And again, you can always go to alta.org/webinars. I do need to thank SoftPro once again for sponsoring today's webinar. We are a few minutes after, but if anyone has any last minute, pitches over to the speakers. We did have one for you, Craig, here. It was at the top. I didn't get in. I think it was during the M&A discussion. I could be wrong, but what level of free service?
I know, I saw that, Jeremy, and Kim, you can email Craig@knightberry.com. I don't know what you're asking, but I'd be happy to talk about anything. So shoot me an email and let me figure that out. I'm not really sure. I don't know what I was talking about at that point, so we'll have to figure it out.
Yeah,
I don't think it was you. I think it might have been what Marcus was talking about. So anyway, she'll be in touch.
Hey, Jeremy, one more time, I do want to offer, if anybody wants to get the cliff notes from this, you can go to closesimple.com/future of everything and download that, and we'll sign up for it. We'll make it available to you in the coming days. So I really appreciate it.
All right. Well, thank you. And just real quick before wrapping up, I just want to take a moment to acknowledge and remember 9/11 and the lives we lost from that attack 23 years ago. Hard to believe that it has been more than 2 decades, but definitely want to take a moment and acknowledge that tragic event. So sorry about that, to bring that down, didn't bring the energy down, but
good.
It is the anniversary of that day. So anything else? Any other parting words, Craig, Paul?
I think that was a lot of fun. So we were worried about timing. I think it worked out real well, went over a little bit. We rambled a little bit early, but I think we hit all our points. Appreciate you having us. Look forward to doing another one on 5 different topics.
Yeah, appreciate it. Thanks, everyone. Thank you, Craig. That was.
I think everyone knows what the future of title looks like now, right?
I hope so.
All right. Thank you, everyone. That brings us to the conclusion of today's presentation. Take care, everyone.